Hello. Today is Saturday, August 3rd, 2024. I am Jason Shapiro with crowdedmarketreport.com. Today I wanted to talk about the importance and the advantage of looking at a wide range of assets to take advantage of when markets have big moves. Because you might not get a signal within your process to catch one thing that sort of is the headline trade, but you might catch it somewhere else that will work just as well. And it doesn't matter where you make money, as long as you make money. And what comes to mind for me, is in 2008, where clearly, there was a big move in just about everything, but the headline is, the stock market, right? And maybe the bond market were the two big headline trades. Stocks got crushed, bonds got bid. And I didn't catch either one of those. My process did not have me short at all the stock market in 08. It did not have me long bonds at all in 2008. I believe that the big trades for me that year were short platinum, short cotton, that's where I made my money. But when I go back and look at my track record, all I see is numbers, right? The numbers were positive. No one asked me, oh, well, did you get short stocks? Did you get long bonds? The answer is no, I didn't. But I caught trades that arguably are on the same macro theme as what caused the stock market to crash, right? Which was this global financial crisis, and everything went down essentially. So, I think the stock market was down like 55% peak to trough in 08. But like unleaded gas was down something like 75%, right? Platinum was down like 70%. So it doesn't matter to me that I didn't catch stocks. I caught the other things within the same macroeconomic theme. So who cares where you did it? And interestingly enough, the recent sort of ugliness in the stock market, I also never had a sell signal. I don't have buy signals, so I'm not long, but I'm not short the stock market. I mean, you can see here, for example, the Dow, there's no massively crowded long here. Sure, a little bit crowded long, but not massively compared to history. Same thing on the S&P, right? And same thing on the NASDAQ. There's no massive crowding here, so it's not for me to get short, so I'm not short. But where there were crowded trades was like copper. You can see was massively crowded back here. And interestingly enough on this one, this was from way back in May, way before the stock market ever topped. So you could have been catching this short copper here and started making money before the stock market even ever went down. The stock market didn't start going down until about here, right? So if you were bearish, if you believed that there was recession coming and you were looking for a trade to put, to capture that theme, this would have been making you money even before the stock market went down. And has made you more money than the stock market, truthfully, because this thing's down about 20% from here. Another example of this recently is the Swiss franc, which you can say was way crowded back here. It's actually started to be way crowded back here, right? And this has been a very big move, in particular relative to the volatility compared to the stock market. And again, this one bottomed way before the stock market did. The Swiss franc is arguably a risk-off trade idea and started working way before the stock market topped. The stock market didn't top until somewhere around here, right? So this would have been working for you if you were looking for risk-off type stuff way before the stock market trade ever worked, and has done so at a better pace. The yen showed massive crowding right as the stock market bottomed, and this would have been a much better risk-reward trade than shorting the stock market as well, in particular compared to the volatility, so you could have sized it much better. Now, look, the yen was crowded here too, and so you probably would have been wanting to buy that here, and you would have probably gotten stopped. At least if you trade like I do, you would have gotten stopped down here, and that's fine. You take one small loss, and then you catch a big gain, and it adds up between the three trades. That adds up very well. There were other ones too showing this type of stuff. British pound was showing massively crowded here. Could have been getting short. This one kind of coincided with the stock market drop. But again, on a return to risk basis and a return to volatility basis, has done better than the stock market. So the point is, and even if you just trade stocks, you should have a large number of stocks on there, because I can tell you there were probably stocks that would have topped way before the stock market, that were weaker, that were doing worse in the stock market, that were failing before the stock market failed, and you could have got short those. One that comes to mind. I'm not a stock trader, but I do pay attention quite a bit to various stocks, to as many things as I can. But this SMCI, right? If you had been looking to get short this AI craze, or believe that this was all a bubble, SMCI topped all the way back in March, right? And when I can remember when the last NVIDIA earnings came out, and NVIDIA ripped higher, SMCI closed down that day, which could have told you, like, geez, if this thing's not going to go up when NVIDIA's going up, well, when is it? It's probably a good short then. And look, SMCI is down a good 40% from highs. And even from the NVIDIA earnings, it's probably down 25-30%. And again, you would have been making money on that before the stock market ever topped, and you would have made more money on that than you would have shorting the stock market. So that's a general idea. Look for various assets. Don't get stuck on just one. Don't get stuck on just trading the S&P or just the NASDAQ or whatever to try and capture your themes. Don't have to be trading the same way that I do. But whatever your theme is, if you're trading a macro theme and your macro theme was, I want to be bearish because I think the economy is going to slow down, well, hell, you could have caught copper, right? Or if you think the stock market is a bubble and the AI is a bubble, hey, you could have caught SMCI by listening to the tape and watching the tape. And over time, this is going to work for you. It doesn't matter what exactly you traded, as long as you're putting up a good P&L. Okay, so that is the general idea today. I hope that makes sense. I hope that helps people. Always happy to hear questions and comments. Please like our video if in fact you like it. Check us out, crowdedmarketreport.com, for more of this type of stuff. And you can check us out on Substack. We have a free Substack where we send stuff out every couple of weeks. And that's it. I hope everybody had a good week. Hope everyone has a nice weekend, and we'll talk again soon. Thanks.